Hello and thank you for joining me in another video. If you are new here, my name is Howard. I've been a retail investor for over 10 years now, and this YouTube channel is basically a place for me to document my research in stocks I'm looking into and also what I'm actively buying. And today we're going to be talking about one of my stocks that I'm investing in the most at the moment, which is Nebius. So I've been buying Nebius from around mid last year in my main portfolio. And in my YouTube portfolio that I'm tracking here on the channel is also now my second largest position. And I increased some buys in that last week. So what we'll get into, first of all, speaking of last week, is the stock price. So if you have a look at the stock price, we had a very choppy week last week. What this meant is that a lot of, if we have a look at Nebius, for example, a lot of stocks got really beaten down, and Nebius was one of those. But what this does mean is a great opportunity to pick up stocks that we are confident in. And it turned out to be a very good thing if you were buying last week. Nebius went down as low as $70 last week on the Thursday. And now if we're looking now on Tuesday morning, if you bought right at the very bottom there, you're up 30% already. This stock had a huge rebound. And what we're going to look into today is, why did this get such a huge rebound? We know it went down, but why has it gone up again so quickly? We're going to look into some news that has been happening around the AI theme that also relates to Nebius. And then we're going to look ahead to the earnings, which are coming up in a couple of days. We're going to have a look at some recent earnings of IREN, which is another data center stock, kind of similar to Nebius. And we're going to look ahead of what we can be expecting for Nebius, and ultimately what does that mean for the share price. So last week, looking here, I've been buying Nebius ever since around $40–50. I made my first purchase last year, which obviously just before the big run up, and I've been averaging into this position ever since. So that's in my main portfolio, and I've also got this in my YouTube portfolio, where I think my average is round about kind of $85–90 there as well. I did pick up a few shares around $70 last week, so it's crazy those have gone up so much. So now we've found this kind of base where we've gone up 30% and we've popped right back up to $92 already. So why we had such a strong run up, let's look into that a little bit more. So of course it was a bit of a flash crash on a lot of growth stocks and also software stocks. So we did have that flash crash and then also a recovery. There has also been some other stuff happening in this AI theme as well. So one thing that I've seen spoken about is Alphabet, Google did a bond sale of over 140, or it saw over 140 billion worth of demand. So what this basically means is Google is issuing debt to raise money to basically help assist their CapEx spend. And one of the reasons people are speculating that AI names such as Oracle and Nvidia took a really nice big jump recently or yesterday is because this bond had over $140 billion worth of demands, and it basically flew out the door. Lots and lots of people want this. So what this means is that, okay, we can see this as a negative in that, okay, these companies are now issuing debt in order to fund this big CapEx. And that is also one of the big things that people are worried about at the moment with AI is, are things getting too frothy? We know that AI is doing great things, but at the moment, we're assuming that it's going to do so much that billions and billions and billions or hundreds of billions are getting invested. And people are worrying, are we spending too much on this? We're not actually going to see the economic benefit on the other side of it. So when it comes to these companies, not just using their free cash flow to fund their CapEx, but they're also issuing debt, that gets people a bit worried. But what it is seeing on the other side is that it shows confidence in the market that they're managing to issue this debt, and it is getting taken up so quickly. And I think that is why Oracle saw a big bounce yesterday as well, because Oracle was famously been issuing a lot of debt to fund their CapEx and their AI growth. And now it's seen as, okay, the market is a bit skeptical about that, but the way these bonds are getting bought up, it shows actually some confidence that people might actually be a bit more okay with people issuing debt now to fund this big AI build out. So I think this has helped the AI names. Nvidia got a nice big pump, or I wouldn't say a pump, but it got some love yesterday on the stock price as well. And that has undoubtedly helps Nebius as well. So next we'll move into something else, which I think is worth looking at as well. So if you're into this data center space, I'm only invested in Nebius, but IREN is another one of the names that has a really big retail following and that a lot of people are talking about. This is started off as a Bitcoin miner that also had, well, of course, it has lots and lots of GPUs for mining Bitcoin, but they've recently pivoted to, instead of using Bitcoin mining as their main source of revenue to actually turn themselves into a data center play and to use their infrastructure for that instead. Now, they released their earnings not too long ago, and they saw a massive crash after their earnings. We'll go into that in a little bit. But their stock price, I think in the after hours, they released their earnings, which were under what people are expecting. At the same time as the whole market was crashing, we got down to just over $30 here, which is crazy. It went down that low, but it's also crazy how quickly it has recovered. If you bought that dip on Thursday, you're up 53% up to where we are now in just a few trading days, which is absolutely incredible. So again, we did see a big drop in IREN, but we've seen confidence come back into the stock price since that as well. And IREN's now pretty much, where are we? Yeah, down 8% on the past month. So we've recovered a lot of those losses. So IREN is a good kind of litmus test for us to look at. I don't invest in IREN. I invest in Nebius because I think there's a lot more things that company has that's unique to that business that I think it's going to be kind of stronger for the long run. But it is useful to look at these market reactions because we do have Nebius's earnings coming up, and we can see that this is AI. There's a lot of eyeballs on these names, and if you mess up, it can be very detrimental to the stock price in the short term. And if we take a look let's have a look at IREN's earnings, for example. So it was a bit of a over-exaggeration, basically, from what I'm seeing from Nebius, from IREN investors. Essentially, they released their earnings. Their cloud revenue grew like we expected, but they did have a double miss on their EPS and on their revenue. Now, it's not too much of a big problem because they're in this moment where they're transitioning away from being a Bitcoin miner onto being a data center. And the main things that people are looking at the moment is, okay, how quickly are they going to get this data center capacity online and then make some revenue from it as well? I think here I read about basically their main source of revenue at the moment is Bitcoin mining. And they didn't really make that much money from that. They made less money of that. Of course, with Bitcoin taking a massive plunge recently, it's not a good place to be in if you're mining Bitcoin. And so that made for the EPS and the revenue loss. And people are now just looking ahead for, okay, how quickly can they put this capacity online? And it seems like it was a bit of an overreaction. People have now adapted to this, which is why the stock has recovered. Now we're moving away from IREN. So actually look onto Nebius, the point of this video, and the stock that I'm invested in, and a lot of the viewers of this channel are invested in, excited in it as well. Let's have a look at what we could expect to. So we've recovered from this big dip in the stock price, and we've actually had two very, very strong days up to around $92. I'm a long-term investor, so this price fluctuation doesn't affect me that much in terms of am I going to buy or sell. But it does show that people are, okay, they've recovered in terms of the Nebius stock and they're looking ahead to the earnings. And we're kind of in a good place running into the earnings, but they do need to execute or we could be going down very, very quickly. So if you have a look at Q3, so what we're going to be looking at in these earnings basically is we know that our current revenue is well below, if we were to look at a valuation metric, that's not what we're looking to value the business. We're looking at the revenue they're going to potentially bring in the future. And that is down to how much ARR they're going to have, annualized run rate by the end of next year. The number they've given us is $7 to $9 billion. It's going to be very interesting to see what they speak about this earnings. Are they going to keep this $7 to $9 billion, which it would be I'd be pretty surprised if they raised it so quickly, only one quarter, but it'll be interesting to see, do they adjust this or do they go more firm on the 9 billion side of things? And also going to be looking into the contracted power at close of year 2026. How much are they going to be able to provide? And then also the connected power, how much they actually have connected and they can provide at the moment. So with a fast growing stock like Nebius, we're not so much looking at what they're doing right now, but how confident can we be in terms of the earnings and the revenue that they're going to get in the future. So what I'm looking at is the guidance, how much capacity they're planning getting online and how much capacity they've got online already. We did get this big note here, sold out of all available capacity. All the capacity they had, they have sold out, which means this connected power and the capacity they're going to bring online is so important, because once they get that online, hopefully we can assume that they'll also sell out of that as well. It's just about, we've got so much demand, can they get it online quick as possible? While they're doing all this growth, we also need to be mindful of the margins. So we do have a good amount of revenue coming from this company, actually already from data center services. So it's good to see at what EBITDA revenues or EBITDA margins they're getting now to see what we can expect in the future. If they can improve on that, that would be fantastic. And then we also look at the other stuff that they've got as well. Have they made any other big deals? What are their current customers? Are they spending more with them? And are there any other big hyperscalers that they've started working with as well? And of course, we have these other businesses as well, which is just kind of an added benefit of investing in Nebius. We have ClickHouse, Toloka, 1010, and AB Ride. So I'm sure we'll get some updates on there. But overall, we're going to be looking at what they're predicting for this year. Are they going to beat, or are they going to exceed their guidance once again in terms of how bullish they are, of how quickly they can grow? And I just did a video a couple of days ago about their new data center build out. They've just formally released this as well, their biggest data center that they are building in Independence, Missouri. Hopefully we'll get some updates on that as well, because this is the first quarter since they've formally actually announced that. It'll be exciting to hear what their plans are with that, how big they're going to be growing it, how quickly they think they can get capacity online. So we should get some official announcements on all of that as well. And if we share on to have a look at here as well, it's also just look at kind of the guidance that people are looking for. So this is what will send the stock up or down initially. We have our kind of target guidance, the consensus that everyone's looking for. The revenue is at 232.2 million. We do have the EPS here somewhere as well. Oh yeah, a net loss, a loss of 44 cents. So when we're talking about revenue of 232 million, we're looking at an annualized run rate of up to 9 billion next year. It is important that they're growing at the moment, but it is more important to look at how quickly they're going to grow in 2026. With a company like Nebius in the AI field that has got so much growth baked in and expected, if we slip in any of these, it can be really bad for investor sentiment going forward as well. So we want to make sure we're hitting all of these numbers. So that's what I've got for today's video. I thought it would be good to go through just because we've seen such a fluctuation in the share price and we can see what the market is doing at the moment. I personally am looking for these small dips to add. I'm not looking at the market this year like it's going to be as easy as the past couple of years. So as you will see in my YouTube portfolio, and also in my other portfolio as well, I do have cash on the sidelines and I'm going to be pretty stingy with my buys. I do have to target shares that I want to get to in Nebius, and I'm going to be accumulating that. But in terms of kind of scattering into other stocks, I'm being very stingy and looking for very good prices. Otherwise, I'm happy sitting in cash. We saw last week how scared the market can get very quickly, and it wouldn't surprise me if we do have that for kind of quite a lot of 2026, because we have gone up a lot in the past couple of years. We do need to kind of find our ground around this spot as well. So I'm really excited to see where we are in Nebius. I'm going to still be capturing shares or acquiring more shares as we go in the YouTube portfolio and in my main portfolio. And as we get up to earnings, I might do a little earnings, kind of my expectations for that video. But what I am definitely going to be doing is a post earnings video, doing a rundown of my thoughts, what I think the earnings are, what I think about the earnings that they released, and also about their guidance and stuff like that, and what I'll be doing in terms of investing throughout the rest of 2026 in terms of Nebius, because it certainly is a stock that I'm really interested at the moment. It's probably the stock that I'm most excited about for this year. So I hope that you found this video useful. If you're a Nebius investor, please do let me know in the comments what your thoughts are on the recent price action, and also what you're looking ahead for in the earnings release. Is there any stuff you're particularly excited to see an update on? I'd love to hear that. And apart from that, I will see you in the very next video.